Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing, and let's talk about Alibaba stock. Now I did a prior video on Alibaba where I did a deep dive analysis and we came up with a valuation for the company. I'm not going to go into that level of detail for today's video, but there are things that we need to talk about, things that we need to update, because last week was a big week for this stock, and not just for Alibaba, for all Chinese stocks, because the risk that was on the table before that we all knew about, the probability of that outcome moved up a little bit based off of some rumors. So there are two things that we're really going to touch on today's video. We're going to dive into some of the rumors of what could happen for all Chinese stocks, including Alibaba. And we're also going to update our valuation. Now, before we dive into all of that, I just want to say a few things about Alibaba, and this is my personal opinion. Based on company performance and the current valuation, if you were to invest in a Chinese company, I think Alibaba might be one of the best places to be. Because based off of the valuation, it seems like it's severely undervalued and there is a lot of potential upside. But there's still that risk, so you have to account for that when you enter into position in this stock for a long-term investment. If you're trading, you're setting your stop loss, you're managing your risk with your trade, it's completely different. Now, it is my personal opinion, given all of that and considering all of that, that you need to have proper allocation to Alibaba if you invest in this company. You cannot let it be too big of a position for your portfolio because there's huge risk involved in Alibaba. But real quick, I just want to let you guys know that WEBULL is currently running a stellar promotion that can get you 2 free stocks worth up to $2,300. You start trading at 4 a.m., it closes at 8 p.m. You can't beat those hours. There's no commission on stocks or options, and there's a bunch of tools at your disposal to make you a better investor or trader with WEBULL. Use the exclusive link that I have down below in the video description to get those free shares. Alright, so why should we adjust our risk for Alibaba? Well, in my personal opinion, we had 2 events last week that increased the chances of a delisting of Alibaba, and that would be bad for the shares. The 2 major events that I'm speaking about are the delisting of DD stock, which is basically the Uber of China, and also an article from Bloomberg. Now, Bloomberg has been very good in the articles that they produce. Most of the time, they are correct. Now, these are still rumors and we don't know exactly what's going to happen, so this could all be bogus. But based off of Bloomberg's track history, I kind of believe that the source that they're getting this information from has been vetted. But China has stated that these rumors are false. If you want to believe China, that's up to you. And the argument that China would not hurt their own companies, I think, is invalid. The reason being is because DD being delisted doesn't hurt DD. They got a bunch of money from the IPO, and then they're just going to continue to conduct business. They don't have to give any of that money back. So essentially, they just got a ton of money and then delisted and screwed investors. It's as simple as that. But anyways, Bloomberg came out with an article saying that China to close loophole used by tech firms for foreign IPOs. They are saying that China is planning to ban companies from going public on foreign stock markets through variable interest entities. Those are your VIEs. This is according to people familiar with the matter. This would close a loophole long used by the country's technology industry to raise capital from overseas investors. The ban, intended in part to address concerns over data security, is among changes included in a new draft of China's overseas listing rules that may be finalized as soon as this month. Companies using the so-called VIE structure would still be allowed to pursue initial public offerings in Hong Kong. Now, the China Securities Regulatory Commission stated on Wednesday on its own website that a media reporting about banning the overseas listings of companies using the VI structure is not true without giving further detail. This is where we stand right now. This might just be FUD. It might be bad reporting, or it could end up being true. I think that if you're invested in a Chinese company, you knew that this was a possible outcome. But definitely, these reports are not good, and in my personal opinion, it just increases the chances of a potential delisting. Now, Alibaba is severely undervalued. If you look at their price to earnings ratio and you compare it to a company like Amazon, you're going to see that Alibaba is trading at a steep discount. Another method you can use is the price to sales approach forward looking. Now, my projections for Alibaba is 20% year over year revenue growth, which is actually really conservative. I'm really discounting my analysis on Alibaba just to put me in a price that I think is severely undervalued to help with some of that risk. In addition to that, I'm just throwing in multiple things to kind of cut this valuation down to account for some of that risk. Now, when we take a look at this price to sales approach that I have for Alibaba for 2022 forward looking, and we use a couple price to sales multiples ranging from 2.5, 3, and 4. If you look at Amazon, they're around 4. So if we take a look at 2.5, that is well below Amazon. It's going to give me a price target of $143. The current price is $111. If I need a 20% required rate of return, my entry price is around $115. That's above the current price right now, so Alibaba would be a buy. If I adjust that even more and get a price of sales of 2, which is essentially half of Amazon, and keep that required rate of return at 20%, then I'm looking at an entry price of $91.66. Somewhere between a 2 and a 2.5 multiple for the price of sales for Alibaba is severely discounting this stock. And that price is hard to pass up. And actually, if you take a look at the weekly chart for Alibaba, we definitely have a support right here, which the high of this candle is $110, which is essentially where we're at right now. So we could see a bounce. But if you take a look at the trend, there is no sign that this trend is over, and the stock could head lower. The next level of support is right here at this candle, which has a high of $95. That essentially is our range. We're looking at $115 to $90, which puts us in this range right here. Now, like I said before, that is based off of valuation. And sometimes fear will overcome that in the short term, and sometimes technicals will overcome that in the short term as well. So I definitely see this range right here, $115 to $90, as being a good entry price for Alibaba, even considering the risk. But there are opportunity costs when you invest in any stock, and there are a ton of opportunities out there right now, in my personal opinion, that I think provide great upside with less risk. So it is for that reason that right now I am not putting money into Alibaba. But if the market was to change and some of those plays were to play out and there's not as many opportunities out there, then maybe I would invest in Alibaba. But with the entire market pretty much falling off right now, I think I'm better suited elsewhere. But that's my personal opinion. Okay, mi gente, if you like this kind of content, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Also, please consider joining our Patreon, which will give you access to a Discord server of over 500 investors. It will give you access to that spreadsheet and other spreadsheets as well, and it will also give you access to weekly reports. It's $5 a month, and the link is provided down below. With all that being said, let me know your thoughts when it comes to Alibaba stock. I'll catch you on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing. And together, we are invincible. See ya.